We have just seen a massive miss on the jobs report in the US. Non-farm payrolls came out about 30 minutes ago, and they've missed. The jobs report missed by 66%. Only 22,000 jobs added, expected 75,000, and the market is responding. Of course, we were all watching very closely because we wanted to figure out what is the Fed going to do next year in about 10 days' time, and are we going to see a jumbo cut? I think we might. We might, and we'll get into details here in a few short seconds. But we also will discuss the massive move in gold. Over $220 since the Jackson Hole speech by Jerome Powell, and gold responded this morning as well, jumping about 0.5%. It has rallied, of course, a lot already. We'll take a closer look at the gold price here as well. And some mining news. We get some other stuff to discuss as well. We'll need to look at the bond market and just wrap up this week. I hope you can hear me well. I hope this is going fine. Let us know. Let me know in the comments. I got those live here. I see them as well. This is the first time we're doing a weekly wrap-up live. I'm in Idaho right now. Going to see a couple mining projects here in Idaho. Just, what is it, an hour and a half, 2 hours north of Boise. Figured the internet is fine. Why not do this live today? So let me know. It feels like I'm talking to the void. Somebody could drop a comment that I'm actually live. That'd be great. But yeah, let's dive right in. Let's take a quick look at the jobs report. I got this already lined up. Let me add this to the screen here. Non-farm payrolls. If you can spot a trend here. Obviously, declining strength in the non-farm payrolls. 22,000 only in August, added, well below the expected of 75, and it is going well. So, meaning going well, it is going in the direction that the market wants to, because now gold is moving. Let's look here. I wanted to zoom in here real quick and just show the trend. Where is my tab? Like, I'm doing this on the laptop, so I'm doing this while I'm traveling, but let's take a look. So 22,000 expected, we're 75 or to 79 even, but we've seen job gains in healthcare. Great. Social assistance, perfect. We needed those. But of course, losses in federal government to be expected. Really interesting, or good to see that. What shocked me, because, well, I'm in mining, is we've seen spending cuts in mining, quarrying, and oil and gas extraction. I can tell you one thing. I don't think it's happening in the oil or in the gold and silver space right now, given the price environment we're in. So this has to be more, I'm expecting on, or assuming more on the quarrying side, because that's more recession, a potential recession indicator, of course, because if nobody's building anything, why would you need a quarry? Why would you need any rock to make your garden look nicer, correct? So that's what I'm looking at. Really interesting. Let's look at the market reaction, though. Let's bring up the market. Let's look at, and I've had this up here. Yeah, let's look at the gold price. Let's look at the December future, 36.35. Absolute massive move here, of course, and this is 0.81%. We are up. It is moving nicely. I've also got this set up here ever since August 22nd, 33.23. Jerome Powell opened the door to Fed cuts, and now 35.79. As we move, I really like that one-day blip. You can see it here on this screen. The one-day blip just jumped up 0.8%. A lot of it has been priced in already, of course. That's why we've seen gold price slow down at the end of the week or just yesterday. And the mining stocks also maybe declining, people taking some of the money off the table in anticipation of that jobs report that we just been handed about 35 minutes ago. Gold is moving. I think we will see a rallying mining space yet again. We're seeing a lot of news come out of the mining space just this morning. I'll go into detail of some of them here shortly, but the market is reacting. Let's look at the S&P 500 as well. Oh, wait, that's the wrong one. What do I have the right one here? There we go. No, it's not the right one. It's the SPY. I'm looking for S&P 500. I don't look at it too much. There you go. So look at this market move. Like, if you look at the S&P 500 move, personally, let's look at the 3-month here. Why is this? Oh, it's off the charts. It is off the charts. But let's look at the 1 month, 5-day. Oh, we need to move this here off. Maybe I should take a course in trading view. What do you think? Anybody willing to sponsor that? But my point is, the market has been rallying. Let's share a different screen here. It's like I'm struggling with this part here. But let's take a look at this index move. Just one day, or 1 week even. It's a massive jump. 65.28, S&P 500 at new all-time highs, pricing it, or the market is now pricing in 3 rate cuts by the end of the year. 1 cut at least at every meeting. It is mind-blowing. I'm not sure where that excitement comes from. Of course, the stock market is decoupled from the economy. It doesn't make any sense to me. As a very pragmatic person, you look at this and you think, well, the underlying economy can't be doing so well, yet the stock market is rallying in anticipation of cheaper rates, cheaper money, and potentially QE down the road. We'll have to see about that. Let's take a look here. Just looking at some of the comments here. All metals are up, obviously. Yes, gold and silver are rallying. Hey, hello to Florida. Appreciate it, Carbone. Thanks so much for tuning in. Hope you're enjoying this. Hope this is informative. Doing my best here to give you a good update this week of what I'm seeing. Of course, jobs report is front and center of what we're discussing. Jobs report. Let's look at the quick reaction to the bond market as well. Or you know what? Before we do that, I want to share this tab. I've been looking at this, like I look at this daily almost these days. Of course, rate cut expectations of the Fed. Next meeting here is in 12 days. 98% one cut. But one thing has changed this morning, and this is the second pillar that has popped up: the 50 basis point cut. Now 2% chance. Chris Waller's been talking about it, and I think gold has started to price in a jumbo cut meaning at least 50 basis points, perhaps more already. And I think that's why gold has moved so strongly. But it's now 2%. This didn't exist about an hour ago when I was looking at this. This is a new column, which is really interesting. Opening the door, market is expecting more cuts, especially more cuts at the next meetings. We get 3 more meetings, or we get 3 meetings this year. So September 17th, October 29th, and December 10th. What are your expectations? Put a comment down below as well. Really curious. Are we going to see a jumbo cut or just a trickling of rate cuts here over the rest of the year? So, but what does that mean? So, of course, reaction, we will see. Let's take a look at the bond market here real quick. Of course, U.S. bond markets. Let's take a look at the 10-year Treasury yield. Let's share this here. It has decreased. It has dropped. Let's go 1 day. You can definitely see, okay, we are seeing rate cuts. The question is how big. Long end of the market is starting to price in maybe more cuts even, coming down, 10-year down to about 1% now in terms of yield. Investors are getting positioned for cheaper money, locking in higher yields. We're also seeing that in the 30-year, which is really interesting, or the 20-year, which is important for mortgage rates, by the way. I'm curious to see if mortgage prices or mortgage rates get priced lower once we see the cuts actually being implemented. That's something we're looking at here deeply, because I have my reservations when it comes to that, especially when we're only looking at a 25 basis cut. Like, why would mortgage rates drop significantly? Why would the housing market recover only because of a smaller cut? It's like, I have my reservations. I've been mentioning them here before, and I've recorded a phenomenal interview with Sri Kumar what was it, yesterday morning, which will be published here over the weekend. Go check that out when it comes out. He has some really clear points on why the Fed should actually be hiking rates right now, because the inflation genie is still out there. It's still haunting us. We're still looking at it. We're getting inflation data next week, next Thursday, which will be another tell. So far, everything points towards it, because Powell said it himself. He's focused on the employment data, and the employment report just today sort of confirmed what Jerome Powell has been saying. Well, we're watching this, and now I think we can cement at least 25 basis point cut in the prices. So just going through the through the comments again, see if I'm missing anything. Appreciate everybody joining us here. ATM, Katie Lathan, really appreciate it. Thanks so much for commenting. Let's dollar's another one I wanted to look at real quick, because dollar, of course, is correlated with gold as well. Of course, massively down today, 0.73%. Massively, I'm exaggerating, but in this grand scheme of things, it is dropping. 97.6. Of course, you can also see here, jobs report has been released. dollars dropping, which is good for us in the commodity space. Of course, everything I'm saying, please take that with a grain of salt. I come from the commodity side. I come from the gold and silver side. So negative data is good for us, sadly. A bit of an ethical dilemma, I have to admit, but that's something we're closely. Let's look at gold. Let's look at gold again here. This chart is a thing of beauty. 35.74. Gold has reacted, as I said, to the move. It has been a spectacular move. I just want to bring that one chart back up. Oh, I destroyed my trading view here. That'll take too long to fix while I'm live, but gold has been running and now into this. Let me just bring this back here. Let's this hasn't switched over. Why hasn't this switched over? It should be showing. It's showing me the bond yields at 30-year, but it isn't switching to gold. Let me switch over to gold. Let me see this. I just want to show you the gold price here. Let's see, share this tab instead. Let's see this. If this is, yeah, this has worked. I just wanted to see the gold price. And of course, we'll take a look at silver here as well. So gold's little brother, of course. It is jumping. It is actually outpacing gold in gains. Gold up 0.86% as we speak. Silver up 1.2% already. Let's take a look here. Let's see if we can break through 41.50 or 41.40. That was the high this week. That's, of course, on the spot market. I don't look at futures too much, although I've shown you the futures price also in the December future price in gold, which is, of course, an indicator where things might be headed. But I'm more interested in the spot market. And 41.18 on silver. Nice move here as well, following gold. Recession fears don't seem to be priced in here in silver. It's more of a correlation to gold because we need to talk recession. This has to come up again. I was just watching a Bloomberg interview where the guest said, like, well, you know, declining jobs market for the last, what is it now, almost 4 years, where we started adding 400,000 jobs, 200,000 jobs. Now we're adding only 22,000 jobs a month. So there's obviously something amiss, and we're running into recessionary fears yet again. Silver, as we all know, has a bit of an industrial component to it, 50% almost. So we have to watch that very closely, whether the pumps are being, whether the brakes are being pumped on silver here in the coming months, coming from the industrial side, taking some of that excitement away from silver, of course. That said, I don't see any excitement or anything slowing down silver right now. We're on the run. I was listening to some commentary yesterday. 42 needs to be is the next level of resistance here in the silver price, and we're moving towards it. $42. Once we're there, apparently there's no resistance. I'm not a chart technician. I'm not even sure what that really means. If there's no resistance to $50, not even sure what the resistance could be. I think it's all about more buyers than sellers, quite honestly. So we'll have to see what that means. But maybe personal anecdote. Let me switch here to full screen real quick. Just personal anecdote. I had a chance to visit the Monetary Metals depository yesterday. And one interesting comment I picked up was that in the month of August, they bought more gold and silver from consumers than they actually sold. So there's a lot of selling going on into the higher prices. The retail investor, a retail consumer, doesn't feel like holding on to gold and silver and this price environment. Of course, it could also be an indicator of nearing financial trouble for the consumer, because if you start selling your gold and silver and grandmother's jewelry, you might be plugging holes on other places, meaning you're plugging holes in your credit card statements. You might have to make ends meet on a daily basis just to cover daily expenses, food, grocery, even rent perhaps. So it's an interesting indicator that I picked up, and that's why I love traveling and doing these things. So pay attention to that. A lot of gold and silver being sold by retail. And I've been hearing as well, the mints are struggling because there's so much demand coming back, or so much, I would say retail demand. What's the reverse? If there's not demand, there's demand for selling. So people are willing to sell their gold and silver right now, and pushing that. One thing I've queued up as well, and I hope I can find it in the sea of tabs I have open here, is a report from the World Gold Council. And let me just share this screen yet again. And one thing I'm looking at, of course, on a weekly basis, and try to catch up with that here. Let me roll up, or let me scroll up here, is, of course, ETF buying. And what does the World Gold Council see? They're tracking a lot of different things. And just in the last week, as of August 29th, global gold ETF demand has finally picked up in North America and in Europe. We're seeing massive inflows. And let me just get the data point here. So our model indicates that strong ETF inflows and rising volatility helped push towards, or were supported, or sorry, let me rephrase that. You can read the sentence yourself here. But likely Fed cut is pushing investors towards gold. ETF inflows plus 0.9% here. Really strong indicator. Investors are fleeing into gold, not buying necessarily physical, but ETF gold. So if you really want to be cautious, of course, buy physical, but that's a different story. We're not going to debate what you should be buying here. Really appreciate everybody's commentary here. Thanks so much for tuning in. Jerry Mandarin, ATM, I mentioned, perfect knowledge. Thanks so much. Means a lot that you guys are watching. If you have any questions, I'll hope to get to some of them at the end here. Really running through this, probably speaking way too fast. Only had one cup of coffee, hotel room coffee, which was a bit awful, quite honestly. I like my coffee, and that wasn't that great. So we talked jobs report. We talked gold a little bit. Of course, we're looking at inflation data coming out at the end of this or end of next week on Thursday as well. Let me just bring up the calendar so you guys have an overview of what I'm looking at as well. Where's the calendar? This is next week. Share this tab. So we're getting inflation data next Thursday, September 11th, historic date, as you all know. Maybe we're getting some historic inflation data. We'll see. But I'm curious what your expectations are. Let me check in the comments. What are your expectations for the inflation data? Are we going to see another uptick in inflation? Really curious. Tariffs still not priced in. We're still waiting for news on the tariff front between the U.S. and China. Just read this morning the U.S. is lowering tariffs on Japanese auto part imports. So lots going on. That said, by the way, news out of the White House. Apparently, there's a big announcement supposed to happen at 4 p.m. Eastern out of the White House. So we'll see what the announcement is going to be. 4 p.m. Of course, aftermarket. Could be interesting. Could have huge implications. The news about renaming the Department of Defense is already out. It's now the Department of War, if you haven't heard that. Really interesting tidbit. Now, let me take a quick look at my notes before I move on so I don't forget anything. We talked about central bank buying in July. Or we haven't talked about central bank buying in July. It was a bit slower, but we all saw that gold was lacking an impulse. I don't think I have to bring that chart up. Gold was lacking that impulse. I said it last week. Jobs report. Now finally we got the impulses last week. The messaging from the Fed is very clear. Chris Waller said it. Jumbo cuts are even on the table, and I showed you Fed rate cut expectations just earlier. I think that really wraps up the macro. I think the jobs report was overall just the biggest factor that we needed to look at. Let's take a quick look at some mining news stuff I'm following that is relevant to my portfolio and maybe to yours as well. Just some bigger news. What news this morning actually out, or last night, Elemental Altus and EMX are merging, forming a new royalty company, Elemental Royalty Corp, close to $1 billion in market cap. And the interesting part why I'm showing this to you is this here. I'm not sure if you've been aware, but Tether Investments. So that's a subsidiary of Tether, the crypto company, is investing another $100 million into Elemental Altus. They've already bought 47% of the company previously, and now they're adding to their shares. They're adding to their investment. Another US $101 million going into a gold royalty company. It's a trend I'm watching very, very closely because it's a lot of new money that could be flowing into our sector, coming out of the crypto space, because they want to back their Tether stable coins with something tangible. Gold royalties is one thing because you can do the math. You can do some cash flow analysis and put that behind potential stable coins. The only thing missing here is, of course, the physical gold, because Elemental Altus, EMX, they're not receiving any physical gold from their royalties, but just nice cash flow. Another one that has popped up this morning is another merger. Newfound Gold is buying Maritime Resources. It's an interesting deal. It made sense. Like, as you know, I was a director of Labrador Gold until May, so I have a really good understanding of what is happening in Newfoundland. And this deal makes a whole lot of sense to me for NFG and Maritime to merge together, build a stronger capital base. Maritime was just ramping up production from Hammerdown, starting to go into production at Hammerdown. They have a mill fully licensed on a port, so it really makes a lot of sense for NFG to jump in. They did have prior relations or a prior relationship before this deal was announced, because NFG gave Maritime about 2 years ago a $2 million loan as well. So they've always seen that potential. Now Maritime was in a position to be taken out. Really good for Newfoundland, because I think you'll really establish a nice new production hub there in Newfoundland as well. So I think these are the most important mining news. Lots of financings I'm seeing as well. I've queued up. I think I had that queued up here, but I'll share you. I'm just one thing I do, of course. I really like following Junior Mining Network. Quick shout out to these guys, really doing a phenomenal job. Let me just zoom in here a little bit, because I want to show you the amount of financings that have been happening. All right, Allegiant Gold closes $10.5 million financing. Marimaca completes 80 million Australian dollar book build. Amazing. That was announced only yesterday. We have Magna Mining, $45 million financing. Tell me we're in a bull market without telling me in a bull market. Just scroll down here and just take a look. Gross proceeds. ES Gold, $5 million life financing. Bunker Hill, $45 million bought deal. That one had me roll my eyes because the stock was trading at 18 cents just earlier this week. Financing is now at 12 cents. I own this stock. My average price is 15, and I'm mad. I don't like it. Constantly being diluted. I was waiting for an exit, quite honestly, to get out of this deal. Now I got to wait a little longer again. Really frustrating. But you get my point. Lots of money flowing into this space. Lots going on. Really excited to see that happen. As I said, I'm in the US right now. I'm doing a couple site visits before heading over to Beaver Creek in Colorado. Probably world's largest mining investment conference for the junior space happening there, starting Tuesday morning. 3 days. I have over 30 meetings lined up with exploration companies, producers as well. Really excited to see that. And getting a request. Leon, I'm seeing your post. Yeah, let's take a quick look at Newmont. Really like what they're doing as well. The chart, of course, in the S&P 500, getting lots of attention. Let me just cue that up here. Really like showing this here. Let's see if anything's changed since I last looked at it. Let's see what the component returns are. Newmont dropped to third. Let me share this screen here real quick. Newmont's dropped to third again. Share screen, year-to-date returns. There we go. Seagate has been picking up. I'm not following that, but it's a hard drive company. I have a few hard drives from Seagate in my computer at home. Palantir, Newmont now third. Newmont, obviously, gold producer. Really like their cash flow. If I'm not mistaken, $6.2 billion in cash right now. Question is now, what are they going to do with that cash? I've been hearing rumors about a number of deals to be presented to us or to the market over the next 48 hours, 72 hours ahead of Beaver Creek. We've seen 2 already. I'm waiting for one more, a potential bigger one as well. My speculation, that's just speculation. IAMGOLD might be in the play. I'm looking at Cote being acquired. It is in that ramp-up phase. Artemis is another target. They are going through their ramp-up right now, producing at insane cash cost of $693, if I'm not mistaken. All in is about, what was it, $800 and something. Absolutely insane move. But let's take a quick look at the Newmont chart. NEM is the ticker. Let's see, there we go. Let's take a look here to date. There we go. There we go. I'm starting to figure this out again, trading view here. Maybe I just need to use it more. So that's a year-to-date chart, of course. Massive move. Taking a bit of a breather. Like all the mining stocks this week started taking a bit of breather. People taking money off the table ahead of the jobs report. And can you see that? Yeah, you can. Okay, perfect. Taking money off the table ahead of the jobs report, it made sense to do that. We didn't know. There's always surprises in store, but in the end, it came out worse than expected. Newmont now trading at what is it, 74.88. It is up sharply pre-market 76.18. We'll see where it opens in about, what is it, 6 minutes. Market opens in 6 minutes. So we'll see a nice open here of the miners as well. Really excited to see that. So ready to take a few more questions if you want. Doing this live, as I said, feel free to put them down in the comments. Leon, or here, where are we? Where was the post I was just looking at? I was just going to highlight that real quick. I really appreciate that. We just talked about Newmont here. Thanks so much for that comment here, Leon. Much appreciated. If we have any more questions, let me know. I'll be online for a couple more minutes. Ask me anything. Like I haven't done a live all by myself in ever. I usually have a guest with me. Lobo Tigre will be joining us for the next FET live commentary. We're doing that in about 10 days' time, right after the FET press conference. And yeah, if there's no more questions, I really appreciate everybody tuning in. Let me put a bow around this. Gold is going to move. Let's take a latest look. See if we can get. Let's queue up the GDX real quick. Where's my trading view? There we go. The GDX. See if we can get some pre-market data on that as well. Oh yeah, GDX opening up at about $1.50. $1.50 higher this morning. So expect a massive run. We're going to see continue. I think the floor has been put in gold with the rate to cut expectations. Really excited what we're seeing here. We are in a bull market. Have some fun out there. Trade accordingly. Be careful. It's not, nobody's ever gone broke taking money off the table or gains off the table. So keep that in mind. And everybody else, thanks so much for watching. Have a great weekend. Hope you enjoyed this live stream. Let me know. I'll post this obviously down below. Any comments are much, much appreciated. Hope this was helpful, and take care out there. Thanks so much for tuning in.